What's good, everybody? Hopefully you guys are doing good. So we are back today. Before I begin the video, don't forget to follow me on Twitter. I am pretty active on there. If you want to send a direct message, this is the best way to do it. I respond quickly. And over here, you're going to see a bunch of different things. I go over stock stuff. I go over quotes that could help you with your productivity, all that good stuff. And once I get my dividend payments, I do post them here via M1 so you guys can see. And I have a link for M1 if you guys are trying to sign up for it. You get $10, I get $10 after you fund it, the $100, no cost to you, and it's a good way to support the channel and the message. All right, let's continue. Today is August 12th. I waited until it got closer to night, so any news that came out, I got up to date off the press. This is fresh. So let's take a look at what happened today in the market. S&P 500 index. As you can see, it was up 1.4%, almost about 47 points. And in case you guys are wondering, we're not covering a stimulus update video because right now they're at a stalemate. There's not a whole lot to update with, and I want to do a different video today for you guys because there's not a whole lot going on. These guys are probably going to go on vacation next week anyways, so it's going to be a while until we have anything happen. All right, let's continue. Now, in case you guys don't know, S&P 500 is the 500 largest companies listed on the stock exchange. We're in the green. We've been in the green. It's been pretty remarkable, guys. Since about mid-March when we hit our lows, it's just continually been in an upward trend. And who knows how long this trend is going to go for. Also, same thing with the Dow Jones, up 1%, almost 300 points in one day. Absolutely crazy. The Dow Jones measures the stock performance of 30 large companies listed on the stock exchange. And same kind of story. So we go all the way back to mid-March. It was about, what was it, 18,000, and now we're all the way back up to 27,976. It's remarkable. It's been a pretty quick turnaround. Now, the question that I've been reading and watching on the stock channels and on comment posts online, are we in a bubble? That's a very good question. I'm going to tell you with complete confidence, we could be, but we don't know for sure. But here's a few factors we can look at to decide what we're going to do going forward. Now, like I always do, I'm going to give you guys both perspectives. This is just for fun and entertainment. You have to do your own research, talk to an expert. This is just meant for your own curiosity and entertainment. So keep that in mind. Let's continue. All right, Warren Buffett, everybody's favorite investor, said this metric signaled the 2001 crash. Now it's sounding the alarm on global markets. 2001 was a crazy year. A lot went down. I don't remember a crash, but then again, I was a little kid watching Pokemon, so of course I'm not going to remember. All right, let's continue. A sell signal is flashing on Buffett's favorite indicator. All right, let's continue on here. Warren Buffett once wrote that investors would have seen the dot-com crash coming from a mile away had they paid attention to what he described in a Fortune article in 2001 as probably the best single measure of where valuations stand at any given moment. Yeah, the dot-com crash of the early 2000s. That's a whole another video for another time. I'm not going to go into it too much. I've done my research into it. Basically, long story short, a lot of these companies that were starting up online, people were just pouring money at them because it was new and emerging market. Most of them collapsed, so that's what ended up happening. Just to keep it simple. And here is a Twitter post. Global stock markets have hit another milestone. All stocks now worth more than 100% of global GDP for the first time since 2018. Pointing to stretched valuations for Warren Buffett, a market cap to GDP ratio greater than 100% means stocks are in bubble territory. So there you have it. Mr. Warren Buffett is thinking we are in a bubble territory. Over the past 2 decades, global markets have taken big hits on 3 occasions after the ratio broke into triple digits in 2000, 2008, and again in 2018. Although the correction in 2018, it was minor, it wasn't that bad. However, something to keep in mind moving forward. The Dow Jones Industrial averaged plus 1%, was up more than 200 points, S&P 1.4%, and so on and so on. As for Buffett, he's been much more active as of late. So here's what is interesting. Warren Buffett has been very, very active. He's faced criticism for lack of maneuvering during the bug meltdown. Still, Berkshire, despite ramping up buybacks and building its position in Bank of America, sits on $147 billion in cash. That's with a B. Warren has positioned himself very well, and that was a big move. They got a lot of money going to Bank of America. Is it possible that he has some knowledge that we don't? Does he have preferred dividends that he's getting because he's investing so much? There's a lot going on. We don't know, but things to keep in mind as we go forward. Stock market bull who called rally off March lows now says S&P 500 overvalued by 5 to 10%. That's kind of what we're seeing. About 5 to 10% they're saying we're over. Liquidity and low real yields are driving the rally, says Stifel's Bannister. All right, so who is Barry Bannister? He's head of the institutional equity strategy at Stifel, called for stocks to bounce back aggressively just before S&P 500 SPX 1.4% notched its March 23rd lows. All right, let's see what we got. That rise in price to earnings valuation metric is particularly the case for tech-related growth stocks, he noted, with a price pattern that parallels the late 1990s tech media telecom bubble. Beginning in mid-June, we saw third quarter risk prolonged virus damage to jobs and growth, much lower 2021 next year versus consensus, which now leads us to believe the S&P 500 5 to 10% overvalued heading into late summer, autumn 2020. Okay, so there you go. We got that as well. He is saying that we are over. Now what we got from CNN, S&P 500 just misses record high. S&P 500 record high by an inch was missed. All right, it happens again. For the second day in a row, the S&P 500 fell just short of a fresh all-time closing high. Index is up 1.4%, yet it was some 5 points below the February record of 3,385.15 it needed to beat. And so the record watch continues. The Dow finished up 1.1% or 290 points. The Nasdaq was close to 2%. At this point in time, like I said, guys, this thing is just soaring. There's two ways to look at this. Either this is just the beginning, it's going to keep going up to who knows, or we're basically hitting our peak and we're going to be dropping here shortly. Again, two different perspectives. Depends how you look at it. S&P 500 near all-time highs. This could be different. Okay, this is from Seeking Alpha, which is also a site I like to use in the past. If you are trying to do research, this is a good tool. They give you a lot of good information on stocks over here, and you can check. They have a screener as well for ETFs or just regular stocks. So if you need a screener, this is a good site to use it. They do have a pro version where you have to upgrade. Like I said, I've only used the regular one, and it can be helpful. All right, let's continue on here. Let's see what Seeking Alpha is telling us. Okay. Will this time be different? The S&P 500 underwent the fastest 30% correction in history. That's something to keep in mind as well. We did drop pretty hard in March, but the recovery's been pretty quick. Usually you have a year, 2 years, 3 years before things kind of get back to normal, but within months we're kind of close to where we've been recently. So that's something that we got to look at as we move forward. The market experienced the greatest 50-day rally in history in June. Also something else that we have not seen. But in the same month, the broad index dropped nearly 6% on a single day after being within 5 percentage points of all-time highs in the same week. Okay, here we go. 30-day average volatility since 1990, collapse of Lehman Brothers, week after 9/11, the peak of the bug. Yeah, as you can see, it's kind of lower compared to the past problems that we had before. All right, let's see. In summary, here we go. Here's a summary. This is what we want to hear. Generally speaking, and using history as my guide, I'm encouraged to see the S&P 500 is about to reach all-time highs. Beyond the headline impact, the milestone solidifies bullish sentiment that has brushed off so far most of the bad news, the resurgence of bug cases, the spike in unemployment, and the mounting case of bankruptcies across the U.S. Yeah, I was reading an article earlier, I forgot which gym it was, but there was some gym that they had to furlough hundreds of employees because gyms in a lot of states, they still cannot open. People who are personal trainers are having a difficult time. Like I said, what's happening in the market does not reflect what's happening in reality with jobs and stuff. However, the market is more speculative in terms of what they think the outlook is going to be moving forward. We got to keep that in mind once these numbers keep coming out, and especially if the job reports comes out and we see unemployment is less, or we didn't lose as much as they had expected, that could also play a factor. This is from Markets Insider. The Fed is blowing a bubble in stocks that usually ends in tears for investors as market looks up to 10% overvalued, Wall Street firm says. All right, let's go down here. The lasting economic damage caused by the bug isn't being reflected in the stock market, according to a note published by Stifel. So this is just to verify what I was telling you guys earlier. Looks like it's the same firm. It's basically having the same information for us. Liquidity and low real yields have been the primary drivers of S&P 500, more than 50% rally from March. And the Fed is once again blowing a bubble that usually ends in tears for investors. The research firm that we just went over earlier, 5 to 10% overvalued into the fall due to prolonged risk to jobs and growth, according to the note. But if the equity risk premium continues to fall 3% by the end of 2021, driven by falling interest rate, expect the S&P 500 to trade at 3,500, representing upside potential of 11%. There you have it, guys. Like I've been saying, this could be the beginning of a crazy, crazy run, or it could just be we're getting close to peaking and we're going to have another correction. NASDAQ 100 index relative to S&P 500 index, deja vu all over again. Like I said, we're going to have to wait and see what's going to happen. A lot of uncertainty. It's going to be a roller coaster. Look at this chart, though. This is from December 2016. We just continued. We had minor blimps here and there, but nothing major. And then we just had that infinite growth, and that's kind of where we've been at so far. We're just kind of hang tight and see if other news comes out. Also, too, the China thing is a big issue that they haven't been talking about lately. But if they don't come to an agreement, if trade wars continue to ramp up, who knows? Price of consumer goods goes up, also inflation. A lot of variables that we got to look at here. If price of goods goes up, people aren't spending as much, it's going to hurt businesses, and we're basically going to be back to where we started. People are not spending as much, all that good stuff. Also, back to school. If school's shut down again, parents might want to buy things to keep the kids entertained at home. Again, a lot of different variables. We just got to kind of keep an eye on what's going on at the moment. Warren Buffett's favorite market indicator soars to 30-month highs, signaling global stocks are overpriced. This is also from Market Insiders. Everyone's favorite investor is back, Warren Buffett. The global version of Buffett indicator, which compares the value of the world's stocks to global GDP, zoomed past 100% for the first time. Buffett said in 2001 the indicator hit a record high in the months before the dot-com crash. It should have been a very strong warning signal. Okay, that could be a warning signal then with the whole, I didn't realize that before, but after I did some research, that's definitely a key factor once it hits 100% for the first time. So keep an eye on that then. Keep an eye on that. Alright, investors, Dow Jones futures, Apple leads strong stock. Yeah, Apple's been absolutely destroying it. Tesla had a split, and 3 giant rebounds bullish. Apple, as well as Tesla and a few other companies that I'm not sure. Cisco I've heard of, but these other ones, Room, I don't know what those are. However, the cases for the bug are still rampant and they're still been growing pretty crazy. Tech stocks, of course, are still doing amazing. Amazon, Facebook, Nvidia, and Google. None of those which I own. Oh, quick disclaimer though, I do own some Apple and some Tesla. They're a very, very small part of my portfolio. They're kind of expensive for me and not really part of my strategy, but I just put a little bit. That just works for me. That is not advice for you. You need to do your own research, talk to an expert, and make your own financial decisions. Fun and entertainment purpose only. I got a couple more links for you guys, and then we could call it a day. Now here's a quick tool that I've used before. I haven't mentioned it. MarketBeat.com. This is also, they have screeners, and they do have a premium service, but like I said, I've never used the premium services. I've only used the basics, and it's pretty good. So you can search a company. So let me search Realty Income, which is one of my favorite companies. I am long on them. They are my ride or die. That's my ride or die. Do your own research. Fun entertainment purposes only. What you do is you search, it loads, and it gives you pretty decent information here. I always like to check out dividends, so you click here on dividend. If you want to look at the competitors, the chart, the financials, insider trades. You have a whole bunch of options. So once you click on dividends, it takes you over here and it shows you when you get paid dividends, how much you get paid, the percent yield, and it shows you the chart here so you can see if they've been growing it or cutting it. Dividend growth, how much they've been growing it, annual dividends. So you'll be getting about $280 as of now per year, or about almost a quarter a month in one share. So the more you have invested in them, the more you'll get paid monthly, as long as they don't cut it. And yeah, it just gives you good general information if you're wondering about a certain stock. Again, it's a good tool, but you gotta do a lot of research, read the investors page, all that good stuff before you do anything. Now, here we go. I'm gonna give you guys the alternate perspective. As I've been saying earlier, they've been saying that we are in a bubble. Now, here are two sources that say we're not in a bubble. Markets make a comeback after Tuesday sell-off. 5 pros on what's next. Stocks rebound on Wednesday after a late day sell-off in prior sessions. And I'm not going to go over this whole article, but I kind of went through it. Basically, some of the stocks have been going up, up, and up, and they're thinking that with everything going on that we're probably going to have an increase. And also, too, another interesting perspective, UPS, FedEx, they're saying that those companies potentially could be making good gains in the market as well, because people are not going to be going to stores. They're going to have to ship more stuff, and people have relatives in other states and a lot of good stuff, other countries. Those shipping options might be more fruitful for people. Also, Amazon's just crushing it. We all know Amazon. All right, here we go. This is the last thing I got, and then we're going to call it a video and go from there. Depression-like collapse is sparking a wartime type boom. Market bull Jim Paulson predicts. So he is a market bull. Bull means that they think the market's going to go up. A bear thinks the market's going to go down. Okay, let's see what he says. A lot of the boom will fall to the bottom line in a bigger way than people currently expect. We could have a very big profit recovery. That would be one of the strongest growth periods we've ever experienced, and it would come after the biggest collapse we've ever experienced. Yeah, we had the biggest recovery. We just went over that. Okay, I don't know how high this thing can go. Who expects but also to the vaccine. That's a good point too. The vaccine, as time goes on, the more, what do they do? What do they call them? When they do those tests, when they run those tests on people, and the trials, that's what it's called. When they do the trials, and it's more likely that the results are good, they might just push it. And they said early next year if they have a vaccine, but who knows? Maybe, let's say by Christmas time, they have a vaccine that they can use. Well, that could help market sentiment. People are going to go back to work. The economy is potentially going to grow. That makes sense, that perspective of what they are saying. And what else we got? That's basically it. Okay, let's just read the last paragraph here. I do like that there's so many worried about that. There are a ton of portfolios waiting for a pullback, and if that doesn't happen, there's $5 trillion of money market funds that could find their way back into the market next year. On Wednesday, the S&P 500 closed 0.2% from its all-time high. Alright guys, so there you have it. Whether or not you should wait, whether or not you should be investing, it's kind of somewhere in the middle. As you can see, there's both perspectives. There's good reasons why we are in a bear market. There's reasons why we are in a bull market. Ultimately, for me personally, I'm hesitant to really go too crazy right now. Like I said, I tweeted earlier that my strategy right now is still the same. Every week I have a certain amount I want to put, and then if I see any deal, then I'm going to go a little bit heavier and invest for that week or that day. But at the moment, there's too much uncertainty, and like I said, I could see a correction happening soon, so I'm just going to sit on the sideline, stick to my strategy. I can't time the market. I'm spending time in the market. I'm just careful with what funds I'm going to put in the market right now. Anyways, that's my strategy. You guys let me know in the comments below with everything you just saw here, with everything that you have seen prior. What's your prediction? Is it a bear market? Is it a bull market? I'm open to a discussion. Like I said, I could see both angles, but maybe you guys have more information or insight that could help sway me one way or another. Anyways, thank you for watching. That's going to bring us to this video. As always, if you're not subscribed, don't subscribe. And if you like the video, don't forget to give it a like. And also, don't forget to follow me on Twitter. The fun never ends. Until next time, peace.